Hi guys, welcome to another video. Today we're going to be doing a weekly market analysis. We're going to be looking at a few currency pairs, and then we're going to be looking to take some opportunities that the market gives us for this week on. So yeah guys, let's dive into the market. Let's dive into the market and see if we can take some opportunities. Now, as you can see from the screen, I have this trade going on. It's a pending trade from the Australian dollar, USA dollar. Now I'm just going to rerun you through how I took this trade and how you can profit also from this trade, because it's currently pending, so you too can take some opportunities there. Okay, let me just go to a clean chart. Let me just clear this out for you. Let me just go to the 4-hour chart so we can see everything clearly. Now, as you can see, we are in a downtrend. From the 16th of June, we've been going downtrend, so we have a bearish market structure, right? So we're going to be looking for the sells. So the first thing I can see is that the market went down impulsively here. It left us with some fair value gaps, inefficient price action right here. You can see here also, this is inefficiency. It was filled in a little bit, but not all of it, and this one is also left out here. So what I'm seeing here is that I don't really think that price is going to go up to fill those inefficiencies yet. There's still more room for price to still go down impulsively to go mitigate the order blocks below and then go up. As you can see, we have a market shift here. Because you can see that price broke that swing point over there. So we went from a downtrend, now it broke up, indicating that we might go up. But obviously before we go up, we must come and mitigate the order blocks below, or take out the liquidity and fill in the fair value gaps below. So I still think there's more room to go down. So I'll show you how I got this trade right here. So let's just go right over here. Let me go to my 1-hour chart. So as you can see, we had this impulsive move to the downside, and then we broke structure over here again. It's not a market shift, it's a break of structure, because a market shift is when price changes direction. This one is just creating a new swing point. So after a break of structure, what we look for is that we look for the premium or the discounted zones. So obviously now we are seeking sells. We're going to be looking for the premium zones. We're going to be looking for the premium supplies, right? So I'm going to take my Fibonacci retracement and I'm going to put it from the high of the swing point to the low of the swing, and then as you can see, the 0.705 and the 0.799 are my discounted zones. So I'm going to be looking for my order blocks at that zone or above, right? So I posted this trade before even this move happened here. I posted this trade on the Instagram page. Let me just show you there, the Instagram page, where I showed you that we could possibly be going down in that zone over there. Is the AUD USD analysis. As you can see here, it's after that break of structure, and then price went to go into the zone. So I took sells here, but I'll just rerun you through what happened after that, how I took that trade. It was about 6 days ago, if I'm not wrong. Yeah, it was 6 days ago. So after the break of structure, I saw over here there's a gap here, there's a fair value gap here. As you can see, the low of that candle and the low of that candle over there do not touch. So we count that as our what's this, as our fair value gap, right? So it's a fair value gap right there. Just make it a little bit smaller. It's a fair value gap right there. Fair value gap. So I know that price has to come and fill in my fair value gap over here and mitigate a certain order block, right? So the order block that I targeted was this order block right here. This order block right there. So that was our premium supply. It was our supply zone. As you know that in the supply zones we look for the sells, right? And then I sold here. I sold here last week. I sold here. Let me just fix this quick. Yep, I sold there. My stop loss was above here, right at the top of the order block, and then I targeted this fair value gap over here. As you can see, we have an inefficient price action here. We have an efficient price, so I targeted this inefficiency right here. So that was I think targeted this whole one. It was 1:4 risk to reward ratio 4. That's not really bad. That's not bad. That's actually good. Not what I aim for sometimes, but that's good too. So I closed that trade right there. I also sent this signal to the premium members. Yeah. So after that, after price mitigated this order block right here, it went down. Then what I saw is that price created liquidity on the downside. As you can see from this point on to this point here, it's levels of liquidity because it's equal lows, right? It's a double bottom, so it's a level of liquidity. So what do we know about those levels of liquidity? They have to be taken down, meaning that there's more reason for price to come down and break this liquidity right here, right? Also, what I saw is that we kept on breaking structures, right, to go to the downside when we went to go create that liquidity. We went to break structures here. This was a break of structure here. We broke other structures here. We broke other structures. So as you can see, we just kept on breaking structures there. So after price created that liquidity, I knew that price was going to go for the false move to the upside. So my job was to look for entries again on the upside, so I can go down to go take out this liquidity. I can go down with the market to go take down this liquidity. So what did I see? Right here, we have a level of liquidity. Many of you who know SMC or who know ICT might even spotted it already. This is a level of liquidity because as you can see there, we have equal highs there. And as you can see, that liquidity was swept, right? So I knew that if price creates this liquidity, it's going to sweep and then look for an order block above, right? So I targeted this order block right there. I targeted that extreme order block right there, and then I took my sells inside this order block right here, right? I took sells there. Took some sells there. My stop loss obviously was here. Usually what I would like to say to my students is that they must put their stop losses above the order block just to be safe, not to be liquidated, right? So I put my stop loss there. And my target initially is going to be on that low right there after price takes out that liquidity right there, after price sweeps that liquidity. So this is the first analysis. So you can see here, price is currently in profits right now. Price is currently moving in profits. That's a premium supply over there. Price is currently moving into profits. So now what you can do is that if you want to look for areas to sell right now after this video drops, you can come and put your sells over on this area. Why am I saying we must target that area right there, that area of supply? It's because here we have a fair value gap, right? And we know that the fair value gap, the price has to come and fill in that fair value gap and mitigate the order block there. So as a trader right now, you can come and take your trades right here and put in your short positions right here, and then you can go down with it again. I could possibly even add more entries there, add more trades there. That is a nice 1:10 risk to reward ratio. That's very good. This one is 10 too. It's 10. Yeah, it's 10 risk to reward ratio. So you could possibly take trades right there on that order block. I will drop this analysis on my Instagram page so that everyone can see this. Usually I don't really post much on Instagram lately. The what's this? The analysis, most of the trades I take, because most of the trades I take is catered only for the premium members, not for everyone, not for like the public. I do sometimes take out trades or take out signals, post my analysis, but I don't really post much these days because the other exclusive market breakdown analysis is reserved for the premium members. So this is the analysis. So this is the first analysis that I am looking for. This is the first trade that I want to take. So if you're looking to take trades on this pair, you can possibly take trades here, and then this is where the market might reverse and then go down to take out this liquidity down here, and then take out the liquidity and then hit our targets right here on the low, right? The next analysis I want us to discuss, I want us to do, is the USD CAD, right? Let me just go to the 4-hour chart. Oh wait, let me start at the daily so we can see the market clearly. I already had analysis put out here. Let me just clean that chart right there. So as you can see, guys, is that price is starting to go down. It's starting to give us bearish momentum, right? So we're going to be looking for the sells over here, even though we know that the overall it was giving us buys, yeah, but price could possibly go down a little bit more. As you can see, there is a fair value gap here. There's a fair value gap here, so price might even go down more. So what do I see here? Let me just close this watch list. The first thing I see on this pair is that we had a market shift right there. Price broke that low right there. Price broke that swing point right there, meaning that we are ready to take the sells, right? After that market shift, what I usually do is that I take out my fib retracement and then I look for a premium zone, because we're looking for sells, right? I look for a premium zone, and as you can see, that price came here to the 0.62. 0.62 is an area of liquidity. I always tell my students that you always target these premium zones, the 0.705 and 0.799, because the 0.62 and the 0.5 are usually areas of liquidity, right? As you can see here, we have what's this? We have equal highs over there. We have equal highs over there. So we have an area of liquidity. As you can see, this area of liquidity was taken out right there. So that's what I always tell you guys, that the 0.62 is an area of liquidity. We always want to target the premium zones or the discounted zones. The discounted zones are only reserved for the buys or the demand zones. The premium zones are only reserved for the sells or the supply zones, right? I hope you understand that. If you want more of that, you can just text me on Instagram or on WhatsApp or on email, and then maybe if you want tutoring or you want to be mentored, I can help you with that, right? And then you can see that price came here to this order block right there. Price came to this order block. Wait, let me just do this one. Let me just take out somewhere and just place it right there, because there's other order blocks on the 4-hour chart, right? But I just want to outline this one because it's just pulse movements. It's just a guideline. It's just a guideline, yeah. So as you can see, price came there to mitigate that order block right there, and then what did it do? Price went down, right? Price went down. So if we could have targeted our low right there, if we would have targeted our low, right, you can see that price, let me just put in that trade right there so there's no confusion. You can see that, sorry about that, you can see that price went down here and then went to go take out that low, right? And then our stop would have been somewhere here. So the risk to reward ratio is 3. That's not bad either. It's 3. So what am I looking for now? It was just an example, because what happens on the left always happens on the right. So bear in mind that. So what can we see here again? After the order block mitigated there, we can see that price gave us a break of structure right here. After price gave us that break of structure right here, price gave us that break of structure, indicating to us that it's going down more. Now, before price can go down, it must go mitigate the order blocks above, right? So what do I see? Here, I can see an area of liquidity, right? I can see an area of liquidity right here. These are equal highs over here. It's a double top, so it's an area of liquidity, because many traders or many retail traders, what they do is that they're going to want to put their trades here, or maybe some of them already have trades put out here, so the market is going to sweep them. The market is going to be looking to sweep them and then mitigate the order blocks above, right? So let me just go to my 4-hour chart so we can see this more clearly. You can see that it's a double top here. It's an area of liquidity. And then what can we see again here? We can see another area of liquidity right here above. I can see another area of liquidity here. I can see what's this? A double top right there. So it's an area of liquidity right there. So the market might be willing to take out that area of liquidity too, and then mitigate the order blocks above it, right? So our analysis might look something like this. Price might be willing to come and sweep that liquidity too over there, and then mitigate this order block right here. You see, price might be willing to come and mitigate this order block right there. So this is our analysis for the USD CAD, because we must always try to recognize the liquidity so we don't become the liquidity, right? So my stop loss is going to be on that high over there, and then my target is going to be on that low right there. So for us, it's going to be risk to reward ratio is going to be 15. That's not bad. That's super good. So if we can really mitigate that order block right there, we can really mitigate that premium supply over there, and then the order block, and then the price reverses on that order block, we can really make profits off of that. We can really make good profits off of that. But as you can see, it's a swing trade, so we're gonna have to be very patient. We're gonna have to wait for a long time, because as you can see, we're on the 4-hour chart. So for price to really come and mitigate that order block above, it's going to take a long while. So we can just wait for the market. Patience is key, guys. Especially if you're swinging, you have to have real patience, because this trade could really come maybe in months. We'll never know. We'll just see what the market does. But eventually, when price reaches or is almost at our order block, I will update you, and I will release a video updating you on these trades, or in another weekly analysis I will update you on how these trades are going, right? So let's go to another pair. We did the odd, we did the NZD CAD. No, we didn't do the NZD CAD. Okay, if you're updated with my channel, you know that I once did an analysis on this, and I once showed you the results on this pair right here. So let me just do it quick. As you can see here, first, what we can outline, let me go to the daily time frame, because you must always start with the daily time frame so you can look at the overall direction, how the market is moving. As you can see, we're in a bearish market structure here, so we're gonna look for the sells, right? Let me just go to the 4-hour chart. At the 4-hour chart, you can see that we kept on breaking structures below, right? And then we go to mitigate the order blocks above, right? So what can we see here? We can see that we had a break of structure right there, and after the break of structure, what do we look for? We look for the discounted or the premium zones, right? that is basic price cycle. And then you can see that we have an order block right here, but we'll talk about that order block after. Yeah, so you can see that we're in the premium zones right there, because you can see 0,705 and the 0,799 are the areas of premium, are the premium zones, right? So let me just do this right here. And then what can we see here, guys? We can see a fair value gap. If you can see here, from here to here, it's a fair value gap, meaning that price is going to have to come into the zone and then fit in the zone, right? So what do we know about the fair value gap? Let me just outline it right there. We know after the fair value gap, after price fills in the fair value gap or fills in the inefficiency, it has to mitigate an order block above or below the inefficiency. So on this order block right there, we can see that there's a fair value gap and then there's an order block above it, and this order block is in an area of premium, right? So meaning that it's a high probability order block, so the order block is more likely to be mitigated and then reverse on there. So I'm going to target this order block right there. Let me just take it this side a little bit. I'm going to target that order block right there, and then my take profit would be on the low right there, on this low right here. Here's that low over there. Yeah, so you can see we have a fair value gap, and then we have a nice premium supply here. We have a supply zone right there, and then that supply zone is in an area of premium, so meaning that it's more likely to be the order block is more likely to be mitigated there and then reverses on that order block right there. So this is an analysis for the NZD CAD 2. So I'll update you guys on what happened to these trades or how these trades are going next week on the other weekly market analysis, right? On the other weekly market analysis, like I did last time on the weekly analysis, I updated you on the trades that I took. I updated you on the trade that I took. What's this? I updated you on the trade that I took for NZD CAD on this same pair. So I'm gonna update you again next week on how this trade is going, on how this analysis is going, right? So this is the trade, guys. You can copy the areas there. You can copy them on your MetaTrader, and then you can put in a sell limit right there, right? You can put a sell limit right there. The opening price is 0,84170. The stop is 0,84598, and the take profit zone is at the 0,80288, right? So that's the analysis for the NZD CAD, right? And then let me just update you on a certain trade that I took. We just hit take profit. We hit take profit now a few minutes ago, an hour ago. We hit take profit. I posted that on my Instagram group, on the Instagram group, Simple Forex _1. So we took this trade, guys. This was a very nice trade. Risk to reward was 11. So we saw first we had a market shift here, and then we had our fair value gap. And after our fair value gap, what did I say about the fair value gap? We look for an order block above the fair value gap if we're looking for sales, right? So we saw that order block right there, that premium supply, and then price came in to mitigate that order block right there. Price came in to mitigate that order block, mitigated that order block right there, and then went straight to profit, guys. So this was a very good trade. We saw that and we were like, okay, we're taking this opportunity. I sent this trade to the premium group. Yeah, I sent this trade to the premium group, and then yeah, we made profits off of this trade right there. So guys, if you want to become a premium member, if you also want to profit off of these trades I'm taking, and profit also on other trades I'm taking too, you can just join the premium group or the premium members. So as you can see here, for 1 month you can get 92% accurate signals, 3 weekly trading tips. We give you trading tips, and we give you tips on how to improve your trading, and then 24-hour support if you have any questions, any trading related questions, or any questions about the about the about our agency, right? So the 1 month premium is 19.99. 19.99 is the first one for the first premium, which is for 1 month, right? So for every month, if you want, for every month you can pay 19.99. So if you want the 3 month premium, you can get it for 49.99, which is 92% accurate signals, 5 trading tips, and then 24 hour support. So you save there, you save about like you save about $10, because if you are going to pay for like each month, 1 month, you are gonna pay $60, approximately $60 in 3 months. So for this one, for this premium, you get it for $50 or for 49.99, right? So you save $10 there. And for the 6 month premium, you get it for 89.99, which is 92% accurate signals, 10 weekly trading tips, 24-hour support, and exclusive market breakdown of how I made those analysis that I made, and those signals, the signals that I sent the analysis for them, how I made them, and how you can also become a more consistent SMC trader. So if you have any, if you want to put in if you want more information about the premium group or the premium signals, you can just hit me up on Instagram on the Simple Forex _1, or you can email us on simpleforex@outlook.com, or you can WhatsApp us. There's a link in the bio, a link tree, so it will take you to the link tree, and then you can just see where you want to reach out. So you can reach out at WhatsApp or email or Twitter or Instagram. So it depends on you which method of communication do you want to communicate with us. So yeah, guys, that's the end of the video. That's the end of the weekly market analysis for this week. So we did the USD CAD, we did the NZD CAD, and we also did the odd the odd USD, right? So I'll update you on those trades later on, maybe next week, when we do another weekly market analysis of how those trades are going, right? Yeah, guys, so I hope you enjoyed the video. Don't forget to like, share, and subscribe, and then share this to your friends. Maybe it might help them too. Share this to a person who you know is interested in maybe trading with SMC, because SMC is literally the best way to trade these days, because you really get to recognize the traps that the market sets, and you become more consistent, guys. So yeah, guys, I hope you enjoyed the video. See you in the next one.